The UK economy is teetering on the brink. Growth has stalled. The latest figures paint a bleak picture. Confidence is waning. The last quarter of 2024 saw GDP growth of a meager 0.1%. This followed a stagnant previous quarter with 0% growth. These figures highlight the fragility of the UK economy. The situation is undeniably concerning. The paltry GDP figures have set alarm bells ringing. Economists are concerned about the lack of momentum. Some fear a recession may be looming. The 0.1% growth in the last quarter of 2024 is far below expectations. It represents a significant slowdown from previous years. The lackluster performance is attributed to a confluence of factors. These include Brexit uncertainty, global trade tensions, and waning consumer confidence. Amidst the economic uncertainty, a worrying trend has emerged: cash hoarding. Households are saving more and spending less. This has led to a surge in household savings. The household savings ratio reached 12% in the last quarter of 2024. This is the highest level seen outside the pandemic since 2010. This indicates a high level of anxiety among consumers. They are clearly worried about the future and are holding on to their cash. The Office for Budget Responsibility, OBR, has issued a stark warning. They have downgraded the UK's GDP growth forecast for 2025. The outlook is now decidedly gloomy. The OBR now predicts growth of just 1% in 2025. This is a significant reduction from their previous forecast of 2%. The OBR cites several reasons for the downgrade. These include the ongoing uncertainty surrounding Brexit, the global economic slowdown, and the potential impact of US tariffs. Looming US tariffs threaten recovery. The UK economy faces another serious threat: US tariffs. As the nation struggles to recover from the economic downturn caused by the pandemic, the looming tariffs from the United States could derail the fragile recovery. British businesses, already grappling with supply chain disruptions and reduced consumer spending, now have to brace for additional financial strain. The Trump administration is poised to impose tariffs on a wide range of goods. This move is part of a broader strategy to protect American industries and reduce the trade deficit. However, the timing couldn't be worse for the UK, which is still navigating the complexities of post-Brexit trade agreements and trying to establish new economic partnerships. This could have a devastating impact on UK businesses. Small and medium-sized enterprises, which form the backbone of the UK economy, are particularly vulnerable. Many of these businesses rely heavily on exports to the US, and the additional costs imposed by tariffs could lead to higher prices for consumers, reduced sales, and ultimately closures. The US tariffs are set to come into effect on April 2, 2025. This date is fast approaching, leaving little time for businesses to adapt or for the UK government to negotiate a reprieve. The uncertainty surrounding these tariffs is already causing anxiety among business owners and investors. They will target key UK exports, including cars, whiskey, and textiles. These industries are not only significant contributors to the UK economy, but also symbols of British heritage and craftsmanship. The tariffs could lead to job losses in these sectors, further exacerbating the economic challenges faced by the country. These tariffs could cost the UK economy billions of pounds. The financial markets have already started to react, with the British pound showing signs of weakness and stock prices of affected companies declining. The long-term economic impact could be severe, potentially leading to a recession if not addressed promptly. They also risk sparking a trade war between the US and the EU. The European Union has expressed its concerns and hinted at possible retaliatory measures. Such a trade war could have far-reaching consequences, disrupting global supply chains and affecting economies worldwide. The need for diplomatic resolution has never been more urgent. Section 6. Retail and hospitality sectors grapple with uncertainty. The retail and hospitality sectors are bearing the brunt of the economic slowdown. Consumer spending is down and businesses are struggling to cope. The situation is particularly acute on the UK high street. Retail sales have been sluggish in recent months. The hospitality sector is also facing a perfect storm of rising costs and falling demand. Many businesses are struggling to stay afloat. The situation is likely to worsen if consumer confidence does not improve. Section 7. Experts divided on economic outlook. Economists are divided on the future of the UK economy. The debate is intense, with experts presenting a range of perspectives based on various economic indicators and models. This division is not just academic, it has real-world implications for businesses, policymakers, and the general public. Some believe that growth will pick up in the coming months. They point to recent data showing an increase in consumer spending and business investments. These optimists argue that the worst of the economic downturn is behind us and that the economy is poised for a rebound. Others are more pessimistic and predict a prolonged period of stagnation. They highlight ongoing issues such as supply chain disruptions, rising inflation, and geopolitical tensions. These factors, they argue, will continue to weigh on economic performance and hinder any significant recovery. Pantheon. Macro predicts that growth will improve in the first quarter of 2025. Their analysis suggests that several key sectors, including technology and healthcare, will drive this growth. They also expect a boost from government stimulus measures and increased consumer confidence. They believe that households will start to spend some of their accumulated savings. This pent-up demand, they argue, will lead to a surge in retail sales and other consumer-driven sectors. The increased spending is expected to create a positive feedback loop, further stimulating economic activity. However, they warn that US tariffs pose a significant risk. These tariffs could lead to higher costs for imported goods, which would, in turn, reduce consumer spending power. Additionally, trade tensions could disrupt supply chains, further complicating the economic recovery. Capital economics is more pessimistic. They argue that the structural issues facing the UK economy are too significant to be overcome in the short term. Their analysis points to long-standing problems such as low productivity growth and an aging population. They maintain a gloomy outlook, citing high business taxes, global uncertainty, and weak consumer sentiment. These factors, they argue, will continue to drag on economic performance. In their view, any recovery will be slow and uneven, with significant risks remaining on the horizon. Politicians from all sides are weighing in, each with their own vision for the future. The public is also deeply divided, with protests and rallies becoming a common sight in cities across the country. The Labour Party is calling for a wealth tax to fund increased public spending. They argue that the wealthiest individuals and corporations should contribute more to help the country recover. At rallies and public events, Labour leaders are passionately advocating for this policy, emphasising the need for greater economic equality and social justice. The Conservatives are vehemently opposed to this idea. They believe that a wealth tax would stifle economic growth and discourage investment. In meetings and press conferences, Conservative leaders are making their case, arguing that the best way to stimulate the economy is through tax cuts and deregulation. The debate is becoming increasingly acrimonious. Both sides are digging in their heels, and the rhetoric is growing more heated by the day. Accusations of class warfare and economic mismanagement are flying back and forth with no end in sight. Labour argues that a wealth tax is necessary to address inequality and fund vital public services. They point to the growing gap between the rich and the poor and the strain on public services like hospitals and schools. They believe that a wealth tax is a fair and effective way to redistribute resources and ensure that everyone has access to the services they need. They propose a tax on the assets of the wealthiest 1% of households. This would include high-value assets like luxury homes, cars, and investments. Labour leaders argue that this is a small price to pay for the benefits it would bring to society as a whole. The Conservatives argue that a wealth tax would be economically damaging. They believe it would lead to capital flight as wealthy individuals and businesses move their assets abroad to avoid the tax. They also argue that it would discourage investment and innovation, ultimately harming the economy. They believe it would deter investment and lead to capital flight. The stock market could suffer and businesses might be less likely to expand or hire new employees. The Conservatives argue that the best way to address the economic crisis is through policies that encourage growth and investment, rather than punitive taxes. The debate is likely to continue for some time. With both sides firmly entrenched in their positions, it seems unlikely that a resolution will be reached anytime soon. The nation watches and waits as the political battle over the wealth tax rages on. UK economy at a crossroads. The UK economy is at a crossroads. The coming months will be crucial. The government needs to take decisive action to restore confidence and boost growth. Failure to do so could have dire consequences. The challenges facing the UK economy are significant. However, there are also reasons for optimism. The UK has a highly skilled workforce and a diversified economy. With the right policies in place, the UK can overcome these challenges and prosper.